sales bridge report can easily be exported to Excel, where you can filter, sort, freeze, what you want. Hi, welcome to our overview of the Sales Bridge Analysis Report for SAP Business One by Otis. This report is also known as the Price Volume Mix Analysis Report. The SAP Business One Sales Analysis Report gives you a quick look at sales and margins by product, but it doesn't compare those sales and profits to a budget or another financial year. It provides no analysis of where the variance from budget or another year came from in terms of components. The sales bridge breaks out the variance from the budget and prior year by three components: price, volume, and mix. This allows you to more fully understand the way in which your sales team has arrived at the revenue totals that they have. In this presentation, we'll walk through an example of budgeted sales versus actual and show how these components are presented on the sales bridge report. Let's take a look at the totals first. The control amounts for our bridge reporting are taken from the profit and loss financial budget report. You get your total variance by subtracting the budget revenue from the actual revenue. Let's take a look at this SAP at this report and at the sales bridge report to see what we find in these numbers. The P&L budget report gives you a high-level view of the overall revenue variance from budget. These numbers are the totals that you'll find on the sales bridge as well. The benefit of the sales bridge is that it breaks the total into components, and it does so for each product. On this report, you can examine the contribution of each product to the budget variance as well as the variance from prior year. Let's take a look at the sales bridge. You can see here what the sales bridge report looks like. On the last page, you will find totals that correlate to the financial statement. If we look at the headings, you'll see budget, actual, the delta, and then as well we have the breakdown of the different components of that variance: volume, mix, and price. We also have prior year and the same breakdown over to the side. You will also notice that the sales bridge report can easily be exported to Excel, where you can filter, sort, freeze as much as you want, and you'll see that it keeps the colorful formatting from the original report. The report first presents the budget and actual data by product. Both quantity and amounts are used in the calculation. You can see the variance by each product in this view. The percent total column lists the percentage that the quantity for this item represents of the total for all products. We've only listed the first two products here for convenience. You can see the relevant columns and calculations in the table at the bottom. When a business measures its production capacity and actual delivery of goods, it can monitor the overall volume of the business by how much product is moved through its doors. Sometimes this is measured by space, and sometimes this is measured by quantity. In the sales bridge report, we measure the volume by overall quantity sold. The volume effect is calculated by first figuring out how many units we would have sold had we sold the total actual units, but at the percentage of budgeted total for each product. The units budgeted for is then subtracted from this number and multiplied by the budget price to get our volume effect, as you can see in this example. Most businesses want to sell more of their higher priced products whenever possible. The ratio of products sold to each other is called the mix. We determine the mix effect using the same quantity at the budget mix that we calculated in the volume calculation. The difference for the mix effect is that we subtract this quantity from the actual quantity to determine our impact. We take that difference, which in our case is 162 units for product A1, and then multiply it by the budget price to represent this impact in dollars. It's very useful to evaluate the mix effect by product, isolating the biggest contributors to the variance from budget, either positive or negative. This will help explain why you either improved the budget or undersold what was planned. The price effect of the variance analysis is the most straightforward. This is calculated by taking the difference between actual price and budgeted price and multiplying it by the actual units. This separates the effect from only the price from other elements of sales. This allows a sales manager to evaluate how much discounting sales reps had to do to achieve sales. So you can see from our graph here that the sum total of the three components of the sales bridge should agree to the financial variance from the budget. In our case, we have two positive contributors and one negative. The majority of the increase over plan was from selling more high-priced items. This allows someone who is analyzing performance to give a more complete view of why the variance from budget occurred. Whether managers use this to adjust performance-based compensation or whether they just use it to make strategic plans, this information is beneficial for understanding the direction of the business. Thank you for joining our presentation on the Sales Bridge Report. For more information, please subscribe to this channel or go visit our website at www.audes.com.